What's going on, everybody? It's Stas here. So in this video, we're going to be doing an M1 Finance portfolio update, going over all of the stocks that I own, all the ETFs I own in one of my long-term accounts here in the stock market. And I also want to go over what have I been doing in this account. I've deposited some money in here, and I want to go over what stocks have I been buying, what have I been selling in this account, if anything, and how many dividends have been made in this account, and what do I plan on doing with that dividend money. And you guys could probably guess what I plan on doing with that dividend money. And I also want to go over what I'm looking to do in the future here, as the market is very volatile. It's very rocky at this point as we're leading into the United States presidential election here. So I want to go over just everything going through my head as a long-term investor. And keyword there, guys, this account is a long-term account. This is not a trading account where I'm going in and out of stocks. This is not like that. This is a long-term account. So if you guys find value, hit that like button for me, subscribe to the channel, and make sure to check out the playlist of this account to see where it started back in July of 2019 and how it got to where it is today. And that is linked right down below in the description box. So let's get started. I think last time I made a video on this account, it was about a month ago, and it was about, what was it? I think $6,400 of an account back a month ago. I think it was towards the end of August when I made this video, the last video. And it's funny, guys, because ever since that video, the market has done very poorly. All of September, pretty much, you guys know this, and historically speaking, September's been a rough month in the stock market. Well, it's been another rough month in the market. You know, the history is repeating itself. So ever since that video, this account has actually gone down. I mean, a month ago, you guys can see it here, back in August 26th. Ever since then, we're down about 4% on the account, down $262. Yeah, I did make dividend money. You guys can see it here, earned dividends plus 17 bucks. So there is some cash flow coming in to the portfolio from dividends, which is good, and which is why I like dividends, because you can get paid no matter what the market's doing. But the market gain is down 280, meaning the price of the stocks, the ETFs that I own in this account, they've gone down. We've seen some price depreciation in the past month, but that's okay, because long term, I'm not worried about that. This is just short-term fluctuations. So what do I own? We have, again, $6,800 in this account. What do I own in it? I own DGRO, which is a dividend growth ETF, iShares Core Dividend Growth ETF. I'm currently down. Let's go to the all-time to show you guys all-time. All-time, I'm currently break even on this position, pretty much $600 of value. I'm down about 15 cents, but honestly, I'm up on the position because we see earned dividends. Actually, no, that's wrong. That's including earned dividends. Market gain, I'm down 850. Dividends, I'm up 840. But overall, I'm pretty much break even there. And again, I'm not worried as long term. I think we're going to do well on DGRO, and the dividend income is going to continue churning in. The second biggest position here, and you guys can see them for yourselves, right? The second one is Starbucks, SBUX. I've been calling this one out on the channel a lot. I was buying it in the mid-70s, low 70s, a little bit in the 80s as well. You guys can see my average shares at about, average share price is at about 75 bucks on this position. I'm up about 14%, 50 bucks for market gains, about $2 from earned dividends, doing well there. And Johnson & Johnson's another one here that I love, up about, 13% on this one. Average share price at about $140. We've made some good dividend money here, $6 in dividends and $16.50 from market gain. And mind you guys, this return here, I always talk about this when I make my M1 videos. It's not completely accurate, I'd say. It's what is called a money-weighted return. Go look it up, and you guys can see it here. If I hover over it, it says money-weighted return of this investment. So it's not calculated, I'd say, the traditional way, I guess you can say, but we're gonna just go with it and talk about it, right? So J&J up 13%, money weighted average. Microsoft up about 25% here, up $50, market gain about $1.50 from dividends. My average price on Microsoft is at about $180 per share. I'm liking that a lot. Disney here is one that I was buying pretty much the past year periodically, right? I'm in at about $127. I'm down a little bit on the position. Haven't made any dividends either. As you guys know, dividends for Disney, I believe they were cut for one of the payments. And you guys, if you guys didn't know, Disney pays twice a year. It's a semi-annual dividend. So one of those payments got cut. So I'm not sure when the next one is for Disney. I haven't really checked. But either way, I'm just going to continue buying. I don't really care when the dividend comes. When it comes, and then I'll just reinvest it, right? And under that, we have Pepsi, McDonald's, two safer, quote-unquote, companies, more stable. They've been around for years. They pay great dividends. They're blue chip. So I own Pepsi at about $133. Now it's trading right around $133. I've made about $3 on dividends from Pepsi. And I understand, guys, that you're not going to make a lot of money from price appreciation on Pepsi and McDonald's. Sure, you can make some money, but I'm in these for the dividends. These are more for dividends. I do have a lot of growth stocks in this portfolio as well. And the way I've built this portfolio is it's kind of a mix of both. It started out more as a dividend portfolio, but as time has gone on, I threw in a bunch of other growth names. You know, I have Facebook, Google, Amazon in here now, Microsoft. I just like to have all around companies in here, not focusing strictly on value or strictly on growth. It's a mix of both, right? There's growth, there's value, there's dividend income coming in. That's kind of how I like to build my long-term accounts here, right? And yeah, I do have some accounts that are just growth only, value only, but for the YouTube channel, I like to make it like this to show you guys that diversity is it's a great way to invest for most people out there, right? For most people out there. And for McDonald's, I'm in at about $198 a share. I'm up about $30 market gain, about $4 on dividends. Under McDonald's, we have MasterCard, which I love, guys, in at $294 on this one. They pay a small dividend, but this is more for the growth aspect of the business and the growing dividend. I guess you could argue that, yeah, they pay a small dividend now, but the dividend is growing. So in the future, the dividend is going to be better and more hefty, right, in terms of dollar value. So MasterCard, I love this company, guys. Under MasterCard, we have Google. I just added this one, I think like 3 weeks ago. I bought in at $15.30. I averaged in a bit more about a week ago. We'll go over that in a couple minutes here. And under Alphabet, which a lot of people just call it Google. You could just call it either or, honestly, guys, but the traditional name, I guess, is Alphabet. Under that, we have Facebook, we have Amazon. Amazon, I'm in at about $2,200, so nice cost basis there on Amazon. Facebook, I'm in, let's take a look here, guys, $226. And the funny thing is, guys, I don't know what my cost basis is for a lot of these stocks, so we're looking at this together because for long-term investing, what I do is I just average in, and if the markets dive heavy, I just buy in more, and I'm not too fixated on what my average price is. I just get in and just let it do its thing and kind of forget about it, right? That's the whole goal for me when it comes to a long-term account, right? So Amazon, Facebook, Realty Income here is a nice monthly dividend payer. I'm in this one at $63. It's down a bit, but I don't care because it's for the dividends, right? Market gains down 18, but dividends are up about $6 all time here, which is great. Under that, we have VEA, which is about 5% of my portfolio. And most of these guys, most of the positions, you guys can see it for yourselves, are around 5% of the portfolio, and that's kind of what I stick to. I mean, we have some here that are about 3%, and we'll talk about that in a minute. But for now, VEA is a Vanguard FTSE Developed Markets ETF. This excludes the United States market, so if you guys want some international exposure, this one is great. I love it. I'm just averaging in and just forgetting about it. And under that, we have ARK, guys. I talked about this in the previous update video about a month ago, I started buying some ARK Invest ETFs here. This is the ARKK one. This one's the Innovation ETF. I believe this is the I guess you can say it is the most popular one. They have Tesla in this one. They have Square in this one. They have a bunch of other ones. I mean, go on the website for yourselves, guys, and take a look at what ARK ETFs are comprised of. But this one's great. It's the Innovation one. I've been buying into that. Altria is another one here that I own, but it's not a growth stock. It's more of a dividend play, right? Their dividend right now is about almost 9%, which is unbelievable. I'm in at about $42 here with Altria, and I've made $16 in dividends on a very small position of about $300-400 in the past year, which I'm happy with. As that grows, it's going to be even more cash flow coming in from that position. And under that, we have AbbVie, which AbbVie right now I'm in at $90 roughly, and this one's more of a dividend play as well, dividend of about 5.3%. So I'm liking that long term for dividends. And under that, we're starting to get to the smaller positions. We have PayPal here. And the reason why PayPal, I haven't bought more into it, guys, is because, and you know this if you've been following my account here, this I bought in about $90, $100 back before the whole crisis. And then it exploded up to $200, and I just didn't add more to it. And I figured I'm not looking to buy when I'm already doubled up my position, but if it gets down to, let's say, 150, 130, closer to that cost base at about 126 now. So I guess I did add more in the mid hundreds since my cost base is up a little bit now above that 90 to 100 level. But I'm just not willing to buy when the stock's at 190. I'm just going to hold it at this point, and if it does get under 150, that's probably where I'll start to average more into PayPal here. So under PayPal, we have Duke Energy. This is a dividend play. It pays about 5% here. I'm in at about $90 on this stock, so I'm down a little bit, but it's okay because it's for the cash flow, guys. Under that, we have ARKQ, another ARK ETF, the ARK Industrial Innovation ETF. I believe this one's more on autonomy, robotics. I think this is that ETF. And this one owns Tesla. It owns a bunch of other ones that you guys can go check on the ARK Invest website for yourself. And under that, we have AT&T and Procter & Gamble, two dividend plays that I'm just investing in and forgetting, as these, in my opinion, are stable companies. Procter & Gamble more so than AT&T. AT&T has a lot of debt, which is a bit risky for that company, but they're only 3% of my portfolio, so I'm willing to take that risk for the dividend that it pays. So overall, those are the holdings that I have here, and a more accurate return, I guess you can go to the holdings tab, 21 positions here, 6,600 cost basis, 6,800 current value, so my unrealized gains up about 250. I'm not sure if that's including dividends. It might be, but overall, we're up about 4% over the past 1 year on this portfolio. And the truth is, guys, I'm not looking to change a thing, right? I'm just looking to average more into these positions. And sure, I guess if one position gets a bit overvalued in my account, as you guys saw in the portfolio tab, we've split it up into percentages. You know, if one inflates over the target amount of my portfolio that I want it to be at, maybe I'll trim some and add it to an underweight position. But overall, I'm just looking to add into this account every month. I'm going to be depositing, and you guys can see here, if I go to activity and I go to trading and dividends only, you guys can see what I've been up to. I mean, just recently I bought $500 of stocks on the 9th here of this, not the 9th, 9 buys on the 22nd of the month. I bought in 75 in Facebook, 50 in Duke Energy, 30 in Altria, $100 in Google, $50 in both of the ARK ETFs here, both $50 in each, so that's $100, $50 in AT&T, $40 in VEA, $55 in Pepsi. And honestly, guys, I'm looking to buy more into tech at this point, at this moment in time when I'm filming this video, because tech has been beaten down more than a lot of these other stocks, which is why I've bought in $100 in Google, 75 in Facebook, right? More into the ARK Invest growth ETFs, because these are the types of stocks that have gotten hit the hardest so far in September. So I'm averaging into those. And in terms of selling, let's take a look here. Did I sell anything? You guys can see, yeah, I did sell. My grammar's messed up today, guys. I sold here back in the 10th, on the 10th of September. I sold completely out of SPHD. Yup, that's right. That is the low volatility, high dividend yield ETF. I figured my capital is better served elsewhere, so I took a little loss there on SPHD. And guys, when you take a loss, you can actually write that against your gains. So it's kind of a tax advantage. Talk to your CPA about that. They will know what I'm talking about, right? So don't be scared to take a loss and reinvest the money elsewhere. So I took a loss in SPHD, bought more ARK, bought more Altria, bought a lot of Google. This is where I started my position in Google. And then I bought, here I did buy more PayPal. You guys can see I bought $50 of PayPal there. So overall, I mean, this is what I've been doing. And dividends have been coming in. Duke about $2. Which is Realty Income, about $1.20. McDonald's came in at $1.90, and I bought even more stocks on the 9th of September. More ARK, more McDonald's, more AbbVie there. You guys can see it. And, Microsoft dividend here, 93 cents. J&J dividend of about $2.70. So you guys can see, I mean, this long-term investing game, it's long term. It's not going to happen overnight. I mean, it's going to take a nice 5 years before I really start to reap the rewards of this portfolio. Not that I'm going to be living off of it in 5 years, but in 5 years, the 7,000 portfolio that I have now, if I keep investing into it, keep adding into it, it's going to be over 100,000. It's going to be over 150,000, depending on the variables I can control, which is me adding money into it. Right, obviously. It's not going to go from 7,000 to 150,000 without me adding money into it, but if I'm adding in 500, 1,000, 1,500 every month, reinvesting the dividends, then it's going to start compounding, piling up, and the portfolio is going to explode. So if you guys are kind of losing motivation because long-term investing is slow, just keep at it. Just keep at it. Keep going in, keep investing, keep adding into it. $500, $1,000 a month, whatever you can afford. And then a couple years later, you're going to look back and see, wow, I have a nice pile of money set aside here that I can use now to do this, to do that, buy a house, even hold for the long term, and just live off of it in retirement. There's a lot of options here. So that's kind of what I've been up to, this past month. Just a lot of reinvesting dividends, buying a lot across the portfolio, but now I'm mostly focusing on tech. And I'd love to know your thoughts. What do you think about this? Let me know in the comments. What have you guys been doing? What have you guys been doing out there? And let me know if you guys use M1 Finance. I'd love to know. And if you guys enjoyed the video, just smash that like button for me. Subscribe to the channel. That's very important. And if you guys actually want to use M1 Finance, I have an affiliate link down below. I believe right now for September, if you guys do this before September ends, if you deposit any amount using that link, you guys actually get $20 free, just $20, and I also get $20 to invest. But I think that's only for September. So if you guys do want to take advantage of that, it's linked right down below. And for me, I love M1 Finance. You guys know that. I really don't have many complaints. Yeah, they could tweak things here and there, but I've been on it for over a year, and it's been mostly great for me. So check that out if you guys want free money. Again, hit that like, subscribe to the channel. Thanks for watching. As always, I appreciate you guys so much. Be safe out there. Have a great rest of your weekend. Peace out.